Assalamualaikum and hi. Today, our group would like to talk about key drivers in sustainable agenda and energy transition measure. Second, tax incentive to promote sustainable agenda and energy transition. And lastly, the social economy implication of tax incentive on the standard of living. First, Umar will explain about key drivers for our agenda today. So please welcome Umar.
Thank you, Furqan. So our first key driver is net zero carbon emission. Regarding the sustainability agenda and energy transition, the government has launched the National Energy Transition Roadmap, NETR, which outlines 6 key drivers of energy transition, including hydrogen, green mobility, renewable energy, as well as carbon capture utilization of storage, CCUS, on 27 July 2023. Budget 2024 has allocated RM 2 billion to facilitate the national energy transition in order to realize the NETR aspiration and also to achieve the net zero carbon emission. Besides this, financial institutions will also provide financing funds with accumulated value of RM 200 billion to encourage the industry to evolve towards a low carbon economy. And for the second key driver is to preserve of national treasures. In order for them to preserve national treasures, they need to support the state of government's efforts in protecting endangered wildlife such as elephants, tiger, and tapirs, besides increasing the percentage of protected forest areas. Budget 2024 also sees an allocation of RM 200 million, which is RM 50 million up from the original RM 150 million for the ecological fiscal transfer for biodiversity conservation (BFT). Next, Hunafa will talk about tax incentive in promoting sustainability and agenda and energy transition.
Okay, thank you, Umar, for the explanation. Okay, for the first incentive net zero carbon emission is electric vehicle energy. So for the first government of incentive is to include over 170 millions of investment to the leading companies such as TMB, Gentaris Neighborhood, a subsidiary of Petronas, and Tesla Malaysia to install 180 EV charging stations throughout Malaysia. It is to encourage the use of electric motorcycle. The government also will introduce the electric motorcycle usage incentive scheme to the rakyat with an annual income of below 130,000, and the scheme will provide up to 2,400 rebate to buyers. Move to the second incentive, the government proposed to extend the personal income tax relief up to 2,500 of expense for EV charging facilities for a period of 4 years, and to extend the tax deduction for EV rental costs for a period of 2 years. And for the last incentive for the net zero carbon emission is the government is offering companies for a tax deduction up to 300,000 for expense that related to measurement, reporting and verification activities linked to the carbon project. Companies could potentially deduct up 50,000 for each of year assessment for eligible ESG related expenses. This deduction will be applicable for expenditure incurred from Year Assessment 2024 until Year Assessment 2027.
So, for the first incentive for preservation, the government is set to offer tax deductions to organizations supporting tree planting initiative or projects focused on environmental prevention and conservation awareness. To qualify for these deductions, the sponsored activities must undergo verification by the Forest Research Institution Malaysia, FRIN. This measure ensures the entities receive tax benefits for incentives that are officially recognized and endorsed by FRIN, emphasizing the government commitment to supporting credible and impactful environmental projects. Second, the government will extend the tax exemption application period on all social enterprise income until 2025 to support the social enterprise movement in producing positive environmental and social impacts. They are in line with the pillars of sustainability, which is for the company, environmental and social aspect under Malaysia Madani. So that's all from me. Next, I will pass back to Umar to tell our last objective. So please, Umar.
Thank you so much to Furqan and Hunafa for giving an excellent explanation. And for our last objective is we would like to discuss about the social and economic implication of tax incentive on the standard of living. First, we will talk about the positive impacts, and I would like to please Furqan to tell us about this.
Okay, for the first impact, there are energy cost saving. This initiative for energy efficiency and renewable energy can lead to reduced energy costs for both business and individuals. For businesses, reducing energy costs directly can improve the profit margin for the business. The cost saving can be reinvested in expanding operation, improving product quality, or even employee benefits. The second positive impacts are job creation. This is because the demand for skilled workers in sustainable sectors can lead to increased investment in education and skill development. This creates a more knowledgeable and adaptable workforce, which is crucial for long-term economic sustainability for the country.
I think it also has negative impact. First, budgetary constraints. This because government relying heavily on tax incentive. This will lead to make government revenue streams more volatile. Economic fluctuations and changes in business conditions may directly impact the effectiveness of tax incentive, and if making it challenging to predict and stabilize government income.
Yes, I think I agree with Umar. Plus, this also can lead to distributional effects. The distribution effects of the incentive are critical consideration in designing effective and equitable economic policy. If the incentive favor higher income individuals of corporation, it can contribute to widening income and wealth gap. Those who already have more financial resources are better positioned to take advantage of this incentive, rather than concentrating wealth in the hand of a few. Next, it also can lead to initial costs. While the incentive may lead to long-term savings, the initial cost of adopting sustainable technology or practice can be high. Individuals or business without sufficient capital may find it challenging to take advantage of this incentive, potentially creating disparity in access. And that's all for the objective of the social and economic implication of the incentive on standard levy.
Okay, thank you to Furqan and Hunafa for clarifying about the social and economic implication of tax incentive. And as we jump to the conclusion, achieving balance between the positive and negative impact of tax incentive is crucial for crafting effective and equitable economic policies. And government must carefully design and evaluate this incentive, considering the potential consequences on budgetary sustainability, income distribution, and accessibility. Striking this balance is essential to ensure that the benefits of tax incentive contribute positively to both economic stability and improve standard of living for all members of society. And that's all from us. Thank you.